Today's date is February 25th, 2017. Today's video, I want to go over a trade setup that Sam took. I was not up to get into the trade, nor was I up to call the trade because I was up managing my pound dollar trade until about 5 o'clock in the morning. So I wasn't able to grab the Euro New Zealand, which is the trade we're going to go over. But I just want to briefly go over the pound. I had mentioned this in the chat room. So I want to bring it up real quick here. We had a really nice level up here, and so I want to briefly go over it. First of all, we had a few things going on at this level up here. We had a bit of a trend line right here that I was seeing. I had support here, resistance, acted as resistance again and again and again. So this is a very powerful trend line, and you can see the pushes down off of these levels was pretty significant, so I expected a nice push down off of that level. The other thing that I want to note about this trade, this was in fact a CRT level up here. It was not isolated, so it was a little riskier because of that. But the one thing I do want to mention is if you go to the 4-hour time frame, you're going to see this was basically a last resort before price was pushed all the way up to this level. For that reason, this was a bit of a breakout trade. You can kind of see a cup pattern here. I don't even like to talk about those because I don't really mention those too much in the course, but this is kind of like a cup or a rounding bottom pattern. So of course the top of this is going to act as resistance, because if this pattern breaks out, the bulls are going to take over, and they were able to take over price all the way up to this point, which there's going to be another big war between the buyers and the sellers. So this level, because of that reason, was a major level that I was watching. Again, this is a kind of like a rounding bottom. I realize it's not at the bottom of the chart, but it's still a rounding bottom pattern. And so if this level was broken, it's a breakout. For that reason, it's going to be a very powerful level. The bulls and the bears are going to be fighting it because, of course, the bears do not want to give up their territory. Bulls want to take over. So there's going to be a big fight between the two. So I expected some kind of pullback up there for that reason. Not only that, this was the second wave. If you grab your Fibonacci tool here, you are going to see this level right here was a 161 Fibonacci retracement level. So this was a very powerful level to short. So again, we have a breakout level CRT over here. We also have a max move on the chart, which you can see here. We have a trend line right here. So there was a lot of things telling me to sell this trade. If you look at your THV, you can see divergence on that. You can even see divergence on the MACD chart. So there's a lot of stuff going on up there. So I was in this trade. So I had to manage it. So I could not get up for the New York session until about noon on Friday, which was yesterday. So I missed the Euro New Zealand, but Sam did grab it. And so that's really the trade that I want to go over today. You can see this is the chart of the Euro New Zealand. The trade that he got into was, let me pull it up on the 15-minute. He actually entered right here at the very top, 47.33. Then he wrote it down a bit. The reason why this was a good trade, let's go over. There's actually a few things going on here. First of all, you should notice that this is a CRT level. This is a max move level. The CRT level is going to be right here. This happens to be a head and shoulders topping pattern. And as you know, the head and shoulders topping patterns are the most powerful CRT levels to trade off of. They rarely ever lose. So this was definitely an area of interest over here. So we have a CRT level on the M15. We have a max move. There's divergence on the THV. You can see this last push up, the THV continued to drop and was red. This should not have happened. This should have turned back green and headed up. But because this did not, this told me there was a lot of negative momentum coming into the market. On top of that, you were at the daily R3 level, which is right here. This is where we reversed at. Going to the higher time frames, you can see on the higher time frame, we had a new swing low on the chart. So this was a bit of a structure trade. I don't like this deep pullback, so that kind of took away from the structure trade, but nonetheless, you had a lot of sellers positioned right here. These sellers right here pushed price all the way down to here, creating a new swing low. So of course, when the market's rallied all the way back up to that level, there's going to be some selling going on. So on the H1, you had a bit of a structured trade. If you go to the H4, you have the coral moving average, which again acts as resistance. If that is not enough, we can go over to the 1 hour once again, and there is a bit of a trend line here. So not only do you have the sellers positioned right here, the head and shoulders top, the CRT, the max move, the divergence, but also on the 4 hour time frame, like I said, you have the coral, but on the 1 hour time frame, you can see that we have a bit of a trend line. So you have the sellers stopping price, you have the sellers stopping price, you have the sellers stopping price, you have the CRT sellers stopping price, you have the max move stopping price, you have divergence. There are a ton of things going on with the Euro New Zealand up here. So this was actually a very good trade setup. There was also I believe it was a 160, it might have been a 261 Fibonacci, but there was a Fibonacci retracement up here as well. So there was a lot of things going on. I'm not going to put on the Fibonacci retracements because I know that's new to a lot of people. I'm going to do a pretty detailed video on those so I can show you guys how I draw them, because from what I've told from other Fibonacci traders in the group, I draw my Fibonacci's backwards and very different from anybody else. So I want to do a very in-depth and detailed video on how I draw them. Not just how I draw them, but I want to show you why I draw them the way that I do them, because my understanding of the markets is a lot different than a lot of people. And so I try to make sure whatever I'm doing in the markets, it makes sense to me, because if it doesn't make sense and I'm just putting stuff on a chart, I don't like it, because my mindset is very mechanical. I have to know why things are doing what they're doing. I have to know why things are working the way things are working. If it doesn't, it doesn't make sense. It's kind of like if I'm driving a car and the car breaks down. I want to know why it broke down. I want to know, what it takes to fix it. I want to know all the operations of the way the car works so I can better understand how to diagnose it and fix it. Same thing goes for the market. I want to make sure that I understand why the market is doing what it's doing. If I can understand the ways of the market, I can predict the market with exceptional accuracy. So I really want to make sure I understand what's going on in the market. So like I said, for that reason, on the Fibonacci's, I'm going to explain to them how I understand them and why I feel they work the way they do and why I do them a little different than anybody else. But nonetheless, like I said, this was a Fibonacci level up here, as it was actually the Fibonacci level was about right here. So you had a Fib level up here. Again, we had the trend line here. We had the daily R3 here. You had a 15-minute CRT with a max move. You had divergence. And then on the 4 hour, we did have the coral. And then on the daily chart, if I zoom in a little bit here, you can see that we were near the upper band. And again, when price is moving in a downtrend towards the upper band, you're going to have that acting as resistance. So there were a lot of things going on with this trade. The only thing missing on the trade is it was not exactly an isolated CRT level. But the one thing that I do want to mention here was this was a major pivot in the market. If you draw your lines up here where all of this resistance was at, you can definitely see it. You can see that price bounced here. It came down again. It came down again. Kind of sat here, lollygagged around for a bit. Finally broke down. Came back up. Acted as resistance. Broke down again. We blew through price. We came back. Acted as support. Moved up higher. Support again. Support again. Support again. Broke down below it. Acting as resistance. Broke down again, acted as resistance again, broke down even further, acting as resistance again. So this is a major market pivot. It's very powerful because the bulls and the bears have respected this as a pivot level. So there is a lot of things going on at this level, which was 47.40, I believe was the level. The high was actually at 47.34. If I'm in a trade like this, again, the coral is going to be usually a final target for me. unless I'm seeing a lot of things in the higher time frame saying this thing could really go far. In this case, yes, we are at resistance, but I'm not exactly sure this is going to continue to drop like a rock. So I'm not sure I'm really that willing to hold on to a position like that for an extended period of time. Plus, the other thing is it was a Friday, so this is the market close down here, and I do not like holding a position over the weekend. So the Coral moving average is definitely a very good target down here. And if you did hold to target down there, again, 2 bars, I usually exit part of the position, but if you did hold to the Coral down here, you're talking about 46.72 to 47.33. So you're talking 60, 70 pips of profit on that. And your risk is pretty limited on this because of all the resistance up here. And if you're in the course, you know how to set your stop loss up. It's pretty simple. So, but I really did want to go over that today. Again, the thing about trading is this. It was not totally a qualified CRT because it was not an isolated level. But again, it was a head and shoulders, which is extremely powerful. You did have a max move. You did have a trend line up here. You did have a Fibonacci. You did have the Coral. You did have an upper band. And the thing about trading is you're just trying to put the odds in your favor. And when you have that many things going for you on a trade, it is incredibly unlikely that price is not going to respect it. By trading levels like that, oh yes, and of course, like I did say many times before, we had divergence up here too. But when you have that many things going in your favor for a trade setup, the chances of getting stopped out are slim to none. And if you want to keep 80 to 90% success rate like you should be getting, definitely stick to the ones that have all kinds of confirmation like this. I know sometimes it can get frustrating, when you go a couple days without a trade because you're really itching to trade, but when you weigh everything into perspective and you find yourself losing more than you're winning because you're taking crappy trades, I think it becomes a little easier to, just take the good trades. So make sure you're sticking to the ones with all kinds of confirmation, and just make sure you're taking a look at the higher time frame. It's going to help you tremendously. But I'm going to go ahead and cut the video off here, so I will see you in the next video.